You've heard the phrase, cash is king. Well, as an entrepreneur, you'll experience what that expression really means. When you start a business, you incur various startup expenses, perhaps more than you'd expected. At the same time, it can take longer than you'd anticipated to make your first sales because there are a lot of steps to accomplish. You must find your first customers, persuade them to try your product or service, and then collect payment from them. From day one, then, you'll need to pay close attention to your cash flow, the money flowing in and out of your business. You'll need to generate enough income to pay your expenses. And you'll also need to ensure that income arrives in your bank account in time to cover your bills. With cash flow, timing is vital. It's not just how much cash flows in and out that matters. If your business generates $20,000 a year, but you collect all of that in the last month of the year, how will you cover your expenses during the other 11 months? The key to keeping your new venture afloat is to create a financial timeline in the form of a cash flow sheet. A cash flow sheet includes your income targets and your expense budget, and it allows you to track how your business performs against both these estimates month by month or week by week. Unlike a budget, a cash flow sheet is a dynamic document. It serves as both a planning and tracking tool. Smart entrepreneurs consult and update their cash flow sheet frequently. You might want to set aside a regular time each week to do this so that you get into the habit early on of making sure that your numbers are matching your expectations. Let's take a look at how a typical cash flow sheet works. This template, which you can download from this module, is set up for monthly planning and tracking. Unless your business engages in many small transactions a week, the monthly format will probably work well for you. The top part of the sheet shows the opening balance for each month. That's the amount of cash you expect to have in the bank. It also shows the amount of income you expect to make from all of your revenue streams. Now, when you're starting out, it's easy to overestimate your sales numbers. You want to set a stretch goal, but one that's still realistic. You'll also want to align your income goals with the seasons of your business. For instance, if you're offering clerical support to an accounting firm, you can expect your sales to balloon through the first quarter of the year. If you're running a landscaping business, on the other hand, those winter months will be your lean time. As you plan your income targets, this is where advice from a mentor can really help. You might also do some competitor research to get a sense of how much revenue other businesses like yours are generating on a monthly basis. Now, the middle part of your cash flow sheet shows the expenses that you expect to pay out. This is your budget. If it's easy to overestimate your sales numbers, your income numbers, it's also easy to underestimate your expense numbers. Starting out, you might want to add a certain amount of cushion to each variable expense. For example, if you think that graphic design will cost $150 a month, you might want to factor in an extra 20%, let's say, and allow $180. It's better to over budget and have cash left in the bank than to under budget and find yourself short at the end of the month. In a typical business, some expenses stay the same from month to month. Rent, for instance, and subscriptions to apps. Other expenses will vary, and those are the items you'll really need to keep your eye on. Start by setting yourself an average monthly budget and then adjust that budget to align with your income targets, remembering to account for seasonal concerns. For example, will you give Christmas gifts to your major clients? If so, budget for that in December. Talking about seasons, also plan for your tax cycle. If you collect HST or provincial sales tax, make sure you include the payment dates for those expenses in your cash flow sheet. You'll also want to set some of your income aside You'll also want to set some of your incomes aside each month to pay personal or corporate income tax. It's worth having a quick chat with a CRA rep or an accountant to make sure you're clear about what you will have to pay when. Finally, at the bottom of the spreadsheet, you'll see that critical number you want to keep your eye on at all times: cash on hand, or your closing balance. Now, here's where the magic of the financial timeline comes into play. If you use the cash flow sheet provided in this module, the Excel file is pre-programmed to add up all of your income, subtract from that amount all of your expenses, and calculate your cash on hand. That number automatically carries over to form the starting balance for the next month. You don't have to be an accounting genius to predict your cash flow and adjust your business activities as necessary so you keep your cash on hand in the positive. All you have to do is update your income and expenses regularly, and that will give you a clear view of the cash flowing in and out of your business. It will alert you when a potential shortfall is coming, tell you when a major expense is due, and prompt you to ramp up your sales efforts when you need more income. It may take some time to get used to working with your financial timeline, but once you get the hang of it, you'll find that your cash flow sheet is your business BFF, your best friend. As you get comfortable with the tool, it will give you the real-time data you need to guide your entrepreneurial efforts. It will also help tame that sense of chaos that accompanies any new venture and give you the confidence you need to take your business forward and make it all you want it to be.